Welcome to Stock Symbol Selects, where we decode market moves, one symbol at a time.
The 4 phases of a winning stock, how to know when to buy, hold, or sell. If you've ever bought a great stock, but at the wrong time, you're not alone. Most investors don't lose money because they picked a bad company. They lose money because they bought at the wrong phase, or held on too long. In this video, I will walk you through the 4 key phases every winning stock goes through, and show you how to recognize when to buy, when to hold, and when to get out. We'll use just a handful of simple chart patterns and indicators. Nothing fancy, no hype, just timeless market behavior. Let's dive in. These are the 4 phases of a winning stock: consolidation, advancement, topping, and decline. And with just a few reliable indicators like volume, EMAs, and MACD, you'll know exactly where you are on the map. Phase 1. Consolidation or base building. Every explosive move begins quietly. The consolidation phase is where the stock moves sideways, under the radar. There's no hype, no momentum, just slow, steady accumulation by smart money. What to look for? A rectangle channel, where the stock bounces between a tight range of support and resistance, or a symmetrical triangle, where prices compress into a point, like a spring ready to release. Indicators to confirm. Volume is low, sometimes drying up completely. 9-day and 30-day EMAs flatten out and begin to converge. MACD is neutral, maybe just starting to curl upward. This isn't the time to buy yet. It's the time to pay attention. Add the stock to your watch list and wait for the breakout. Phase 2. Advancement or uptrend. Now the stock starts to move. Volume spikes. Price breaks through resistance. This is the advancement phase, your best window to enter. Chart patterns you'll see. An ascending triangle where higher lows push price up toward a flat resistant line. A symmetrical triangle breakout confirmed by strong volume. Or a clean rectangle breakout when the stock exits its sideways range. Indicators light up. 9-day EMA crosses above 30-day EMA, a classic short-term momentum signal. Volume surges on breakout days. MACD moves into positive territory and starts to trend upward. This is the phase where most of the gains are made. The key here? Ride the trend, but don't get greedy. Set a trailing stop or use the 30-day EMA as a dynamic support level. Phase 3. Topping or distribution. Eventually, the momentum fades. Price might keep rising, but the energy behind it weakens. This is the topping phase, when institutions begin unloading shares quietly, while retail traders are still buying. Warning chart patterns. A double top, where price fails to break through previous highs. A head and shoulders top, signaling exhaustion. Or a megaphone pattern, where price swings wildly wider and wider, a sign of increasing instability. And here's the trap. To the untrained eye, a megaphone can look like a stock is about to explode upward, but in reality, this pattern usually precedes a sharp downward move. Indicators start flashing yellow. MACD flattens or shows bearish divergence. 9-day EMA begins curling down or crossing below the 30-day. Volume picks up, but on red candles, not green ones. This is your chance to trim profits, tighten stops, and prepare for a possible breakdown. Phase 4. Decline or breakdown. When the breakdown comes, it often happens fast. Support turns into resistance. Price falls below key moving averages. This is the decline phase, and it's not where you want to be a buyer. What to look for? A descending triangle, where lower highs squeeze toward a breaking support. Breakdown from a rectangle channel, head and shoulders, or megaphone top. Indicators confirm the trend has turned. 9-day EMA falls below the 30-day EMA. MACD turns sharply negative or shows a bearish crossover. Volume accelerates on down days. The smart move? Exit quickly. This isn't about fear, it's about discipline. When a stock enters phase 4, it could take months or even years to recover, if it ever does. Recap and takeaway. Let's recap the 4 phases. Number 1, consolidation. The quiet base, time to watch. Number 2, advancement. The breakout and trend, time to enter and ride. Number 3, topping. The slowdown, time to trim and protect. Number 4, decline. The breakdown, time to exit. These phases repeat across every market cycle, every sector, and nearly every stock. Learn to recognize them, and you'll never chase hype or panic sell again. If this helped simplify how stocks move, hit the like button. It lets the algorithm know you're learning something valuable. And subscribe for more no-hype investing content. Remember, investing involves risk, so do your own research and due diligence and proceed with caution before investing any money. See you next time.